Hey darling, Danetha here. I am a financial psychologist, money mystic, as well as the creator of Money and Mimosas. And today is one of my favorite days of the week because it's Friday. Friday is the day where you get to do your money date and I get to answer one of your money questions. If you're new to Money and Mimosas, new to the concept of money dates, welcome. Be sure to check out this video where I talk through what exactly a money date is. It is your weekly ritual for sitting down, reviewing your finances, celebrating your wins, and reflecting on how you can use your money to make a difference. I choose to do my money dates on Fridays because it's ruled by the planet Venus, which governs beauty and abundance. It's also the Orisha Oshun's day, and Oshun is the governess of the sweet waters, prosperity, beauty, abundance. And that's why I do my money dates on Friday, and I invite you to do it on Fridays as well. And now let's hop into this week's money question. This week's money question comes from Bellina, and Bellina, she didn't share where she's from, but she asked, how do I invest in real estate? Fantastic question, Bellina. And the reason why I ask for folks to share where they're from is because I can give more tailored responses to your geographic location as best as I can. And real estate, especially, is very much geographically dependent. But I will give some general insights to help you on this path of becoming a real estate investor. So exciting. And as a disclaimer, this is not advice, I should say. These are suggestions, things for you to look into. I don't know your personal financial situation. I'm not your financial advisor. So be sure to consult an expert about your specific situation. And the information that I share today is not meant to be taken as specific investment advice, just ideas for you to consider. All right, so the first step to take is to start building your team. One of the biggest mistakes that folks will make in any financial decision, but particularly when it comes to real estate, is thinking that they can do it alone. And even as someone like myself who spends a lot of time reading about money and finances, I don't know everything, nor will I ever know everything. There are experts out there that have insights in specific areas of finances, of the financial market. And I reach out to them because I am always learning and want to better understand a topic that they will know more about. And so when it comes to real estate, you want to surround yourself with folks who know more about real estate. They've made this their living. And that way they can help you navigate the nuances and the different details that are associated with investing in real estate. The first person that you'll want to have on your team is a real estate agent, and that's going to be your first point of contact. From there, they may introduce you to other experts. Some of those other experts would be a loan officer, perhaps an attorney, an inspector, maybe even a property management company. You can find those people on your own as well. However, the real estate agent, because this is their livelihood, they've developed relationships over the years. They can help introduce you to folks that you can look to create your team of experts. The second thing to consider, which will go in tandem with creating your team of experts, the real estate agent, tax accountant, attorney, all those folks, is to get clear on your intention with your investments. And you want to look inward for this information. The experts that you surround yourself with will be very helpful in a lot of different ways, particularly the financials of the situation. However, they can't tell you what financial fulfillment will mean to you and what financial joy will mean to you, why you want to purchase this real estate investment property or several properties. So get clear for yourself what your intention is. If it is for you to make your permanent home, is it for you to uh, buy and then flip? Is it a vacation rental that you live in part of the year and the rest of the year you rent out? Do you have another exit strategy that you're considering? What is the intention behind this investment? And I always say when you think about your financial goals and your intention behind them, ensure that you attach a financial feeling to it. So, is this going to bring you joy, fulfillment, peace, exhilaration? And financial goals in and of themselves can't create that feeling within you. There's a whole process for once you understand what the financial feeling is that you want to attain, and then going about being in alignment with that financial feeling, then you can manifest. But the reason why you want to get clear on that feeling is because then you understand why you are making this decision, and it helps you get connected to the financial decision. On a energetic level, from a emotional standpoint, so that you know, so that you are being true to whatever reason you want to make this investment happen. The next step is you got to save up for the down payment. Now, if you're purchasing this property all in cash, then you don't have to worry about the down payment or even the next step, which is about financing, because you're just going to go buy it all in cash. However, if you're like most folks, you're going to use some sort of financing, and that means that you'll have to come up with some sort of down payment. The rule of thumb is 20%. There are a lot of real estate investments that happen where 20% isn't, you don't need 20% down. That will be something that you'll need to navigate with your team, particularly the real estate agent and the loan officer that they pair you with or that you find on your own, to help you figure out how much of a down payment you'll need to save. But that is a critical step in this process, is figuring out how much you need to have saved and then saving up for it. And then the next step is to get pre-approved. The pre-approval process is about going to a financial institution like a bank, perhaps a credit union, letting them know that you want to purchase a property. They run your credit, they look at your credit history, they look at how much you have saved, and they figure out how much they can loan you. And then from there, once they decide how much they will loan you, then that means you're pre-approved for X amount of money to be used to purchase a property. That can be $300,000, $500,000, 1.5 million. Once you know how much you're pre-approved for, then you can go look for the property that fits within that range that they have pre-approved you for. And this is where having the team of experts already in place is really helpful, because they will help you figure out what are the best loan opportunities out there. There may be a deal with one of your local community banks where they're doing, perhaps it's 5% down payment and no PMI. PMI is private mortgage insurance, where if the down payment is lower than 15, 20%, sometimes the PMI will kick in, which means that there are more fees for you to pay because they didn't ask for a higher down payment. But there may be a loan product out there that waives the PMI and keeps the down payment percentage really low. You may not know that that's out there, but one of the experts on your team may know that that's out there. So that's why you want to have the team already in place, especially for this financing portion of finding a property. And then the final step is to go look for the property. Figure out what kind of property you want. Is it a duplex, a single family home, some other type of property? And then working with your real estate agent to find the property of your dreams. And that is my answer to your question, Bellina. I hope it was helpful. If any of you watching have a question that you'd like me to answer during one of these Money Date videos, please leave the question down below, include where you're from, and I'll do my best to include it in one of these Money Date videos. Thanks again for watching, and I'll see you in the next video. Bye.